This is Boomer Life on CL 650.
Welcome to Boomer Life on CL 650. I'm Joanne Sutton, and today we're speaking with Jim Doyle, Senior Financial Consultant with Investors Group Financial Services. And we're speaking to help boomers demystify their complex financial planning needs. The conversations we've been having over the past year provide a basis to get people interested and involved in orchestrating their financial outcomes. New Year's is a perfect time to reflect back and ask ourselves, are we where we want to be financially? Have you asked that yet today? It's a good day to start. So, Jim, how would you elaborate?
Joanne, I help people see that others are facing situations similar to themselves and succeeding. It comes down to the advisor-client teamwork. Your planner provides the framework to enhance your sense of success. You bring the consistent effort and the positive can-do attitude.
It's likely that anxious investors may tend to doubt themselves and, as a result, may not be confident that they can affect change. I actually believe for a lot of families, household finances are stressful. Could you offer us a few actionable ways to help reduce our financial stress?
Yeah, I'd love to. If we look at the fundamentals of cash flow management and budgeting, perhaps a great place to start could be getting all of your spending under control with a 30-day expense challenge. Tally all of your expenses for an entire month.
Oh my gosh, the 30-day challenge. Can you do it? I think it's a great place to start.
I hope everyone's ready to take a few notes. So here's my first tip. I really like framing goals using pictures. People have an easier time connecting with pictures than with numbers. So I got a little story for you here, and I'm a little bit anxious about telling it. You know, when I was 17, I went haying for a gentleman out in the valley. And I worked up in the mow a better part of a day. And once we were finished, I had a beer. Okay, and the reason this was so special for me is that is the best beer that I've ever had. Okay, now when I think of having a great beer, that story always comes to my mind. So that's why I like to talk about telling stories. Okay, so when it comes to your money stuff, okay, I want to suggest people establish healthy routines. Check your cash inflows in terms of what's coming in and expenses, your outflows, what's going out every week, and combine them with a schedule of your known recurring expenses. Next, align assets with specific financial goals, which means identifying and categorizing each asset, account, and assign it to a goal, such as retirement savings or college savings. Next, establish an emergency fund. This allows you to plan for the unexpected, so that an emergency doesn't trigger a domino effect that puts your long-term goals in jeopardy.
I know for a fact that a lot of Canadians could actually benefit from a financial plan, and I am hearing some great advice here. Focus on the things that you can focus on and create consistent financial habits using pictures.
You know, when people feel that they have the ability to make some choices that can positively affect their financial outcomes, they're more likely to take action. Unfortunately, facing higher levels of financial stress can actually lead to a lower likelihood to seek financial help to overcome it. The clients I work with believe that they can succeed. I'm here to tell you, you don't have to deal with this stress alone.
Start with setting small goals, right? And understand that you don't have to go through this process alone. Financial advisors like Jim are happy to help you get started or change course if you're so inclined.
I want to help people who actually want help doing what's important to them financially. There's a real danger of being diverted in directions you never intended or wanted. So following a written financial plan can serve as a roadmap to help keep the vision and the focus clear. A plan can help you ensure your income exceeds your expenses in retirement. This isn't terribly surprising, but research shows that more than half of Canadians don't have a plan, and 40% say that they would like a plan from their advisors.
So what I'm hearing now, Jim, is that now is actually a great time to be asking ourselves, has my advisor supplied me with a comprehensive written financial plan?
Exactly. All you have to do is ask. As long as the client-advisor discussions are being had regularly, we can help make sure that your current and future needs are likely to be met.
So, a written financial plan is one of the best tools to make sure that your needs are being met and that you're not going to run out of money. I suppose everybody at some level is anxious about running out of money. How do you address this fear?
Well, some fear around money matters is important. I do think we have to fight our human nature when it comes to investing. History has shown us that those who have survived are not necessarily the strongest, but those who are attuned to signs of danger and the best able to pick up on patterns. If you knew that predators came out at a certain time to feed, you had to learn to recognize the pattern and make yourself scarce. Otherwise, you'd end up as something's dinner. And following the crowd, that's been beneficial to our species. When you see a crowd of people running away from something, it's almost instinctual that you want to follow, and that's a good thing.
So does that actually apply to the investing world as well?
Well, in the investing world, however, following the crowd may not be in your best interest, and in fact, it probably can be pretty dangerous. So let's look at it like this. When our stocks go down, our brains see that as a sign of danger. And when stocks go down for a couple of days in a row, we see a pattern we feel will continue, and we want to sell. When a company is making negative news headlines, many investors want to sell. And you're going to feel like you're alone against the world if you want to continue to own that stock. Our tendency to follow the crowd and our search for patterns sometimes works against us. So what's an investor to do?
So what is an investor to do?
In our tendency to follow the crowd, if our urgent need to see patterns in things leads to overconfidence, these can lead us in directions we don't want, and they can work against us. If you want to have a renewed sense of confidence and purpose by following a well-lit financial plan, that's going to be the suggestion that I think I want to propose.
So when we talk about the fear of running out of money, where do taxes come into that discussion? Where do they fit into the picture?
Taxes. Hey, listen, nobody likes paying taxes. When I ask people, when was the last time your advisor did an in-depth review of your tax burden to ensure that you're not paying more taxes than you should? I think that question hits home.
I think we can all agree that we'd like to be able to pay less tax, and paying too much tax is definitely something that you can actually do something about, unlike market volatility, which we've been seeing a fair amount of recently. Do you have a strategy to help people address this particular concern?
Rebalancing the portfolio is one of the things that I suggest to help reduce volatility and improve a risk return. And it can be difficult to let go of a decision or position if you're emotionally attached.
I'm glad you mentioned that. Can you actually explain what you mean by emotionally attached?
When someone likes, say, an oil company stock, for example, because their uncle worked there, not necessarily because of the company fundamentals, or BlackBerry, and I know a lot of Canadians are pulling for them. It's probably safe to say a number of segments of the Canadian marketplace might have been hurt in 2015, notably energy, resources, and commodities. When we make investments, we're likely to have picked them based on available information, cost, investment liquidity, past performance, performance expectations, and our feelings or bias as to how we feel about those particular investments.
When markets are bumpy, we're probably reluctant to make changes for fear of making a mistake, but it makes sense to take a closer look at our investment decisions. I really do think a good question could be, when is the last time our advisor sat down to rebalance our portfolio?
History has shown us that rebalancing portfolios in periods of market volatility adds to long-term performance. It can be impossible to predict the future value of a share based on historical data, so I believe when our own test of predictability or uncertainty, there can be a tendency to seek out patterns in an effort to make sense of the unknown. We form new investment rules, potentially leading to an exaggerated confidence in our own skills. And I think we're hardwired to do this.
So as we're discussing the merits of working with a financial planner and engaging in the financial planning process, where do you think overconfidence comes into play?
In my experience, one of the reasons that some investors, including some very smart and wealthy investors, don't do as well as they could or should comes down to overconfidence. Many investors believe that an opportunity they invest in will play out exactly as they think it will. They're overconfident in their predictions, with the belief that they have the right read on the market or the economy or the political landscape.
it really sounds like overconfidence can result in underperformance. Help us out, Jim. How can we tell whether we're overconfident or not?
Well, Joanne, overconfidence in your particular point of view could suggest that you feel you don't need to revisit your strategy or to hedge or diversify your portfolio because you've considered every possible contingency. Overconfidence could reveal itself in feelings that you have all the answers already.
Exactly. If you're looking to start 2016 with a renewed sense of confidence and purpose when it comes to your financial affairs, Jim can help. It starts with following a well laid out written financial plan. You're listening to Boomer Life on CL 650. I'm Joanne Sutton, and today we're speaking with Jim Doyle, Senior Financial Consultant with Investors Group. And to learn how Jim helps financially comfortable Canadians, I encourage you to give him a phone call, 604-682-5431. And as we head into a brand new year, make 2016 the year that you take charge of your financial picture. Jim's number again, 604-682-5431. And coming up, we'll be looking at the impact of divorce on your financial plan. Those who manage money stress most effectively don't do it alone. There's more to come with Jim Doyle next on Boomer Life on CL 650.
Celebrating the baby boomer lifestyle. This is Boomer Life on CL 650.